Axel Merck, the dollar has been strengthening versus the yen and weakening versus the euro in the past week. But when it comes to the dollar versus gold, nothing's happening. So what's a gold investor to do?
Well, sure. Just as gold doesn't go up in a straight line or the dollar doesn't go down in a straight line, there's been a lot of consolidation. But keep in mind, the reason we like gold is not because of the Eurozone crisis or because of the end of the world. It is because there's too much debt in the world. And as you saw during the fiscal cliff debate and the debt ceiling debate, we're not tackling the real issues. Inflation is a path of least resistance. So we hold gold because the way that governments, and the US in particular, will deal with all this debt is they're trying to inflate their way out of it. And that's why for the years to come, we hold gold. We don't really care about the moves day to day. But as you point out, yes, using other currencies is a great way also to manage the dollar risk, as you can take advantage of the weakening of the dollar, not just in gold, but in a basket of currencies as well.
If interest rates rise, as a lot of market strategists say they're going to, can gold withstand it?
I would think so. First of all, foreigners tend to buy a lot of treasuries. As the rates rise, the bond market turns into a bear market. So historically, when rates are going up, the dollar is actually weakening. It's only in late phases of a tightening cycle that the dollar benefits. More importantly, though, think about what gets policymakers to engage in reform. It is higher interest rates. We are getting away with not engaging reform because of this low interest rate environment. So actually, it may be the worst thing that can happen to the economy to have rates go up, even if it's supposedly because of a good economy. In the springtime, good economic news, and the bond market plunged. Well, if the bond market plunges, our debt becomes unsustainable. We are no better off than Europe is, except that right now our bond market lets us get away with it. And so, yes, a rising rate environment means only another phase of this crisis. It doesn't mean that the crisis is over. And yes, I do believe that policymakers will panic, and this will be very good news for gold in the medium term.